More important than the money, there's been a group of people for really 15 years that have tried to birth this asset into existence. And it's just a time to pause and recognize that it's a community that got together that decided they were going to store their hard-earned worth in this technology. And if Satoshi was alive, because I don't think he is, I'm sure he'd have a big smile on his face. It was a great technology, but it's really the social construct that people learn to understand it and trust each other.
Yeah.
And so in a lot of ways, this is probably the greatest example of a broad-based coalition of people coming together to do something really spectacular.
There is.
And so I think, before we talk about price, I just want to recognize the moment, because $2 trillion asset in 15 years coming out of a guy's idea is pretty stinking spectacular.
It is, and I think there's a generational significance here as well. Many of the people who have made a lot of money in this are on the younger side, and maybe you look at what's, good luck trying to get into real estate, good luck with the stock market. This is a protocol that really has kind of minted a new generation of millionaires and maybe more at this point. A lot of people are also who have been, kind of the real buyers, have sticky hands or whatever you want to call it. I mean, there's people I know and who who have made a lot of money on this, and they still insist they are never selling. Why is that? Why is that?
Do you think that's
people? Yes. Do you think that's still true?
This is a belief system for people, right? It's a belief system more so even than a financial asset for a lot of people. That said, I was on the phone with one of the great macro investors in the world, and we were discussing, we might have just seen in the last 3 months the single greatest wealth gain for 25 to 45-year-olds in history, right? Because they have a lot of their money in crypto. You've had crypto broadly double or more, depending on which collection of coins you own, and what impact that'll have on the economy, right? In general, 23% of wealth shocks get spent in consumption. And I think you're going to see, the tables at Miami are going to get bid back up on the Miami nightclubs, and people are going to be buying houses and cars. And so it'll be interesting to see if the Fed has an input of an increase in consumption from this massive wealth gain that a bunch of young people have made.
Oh, totally. Let me ask you still, for the skeptics, Mike, and even myself, when a neighbor of mine works at Coinbase, and I remember sitting down with him during COVID, and he wrote out the whole thing, he explained it all, and I thought, okay, I intellectually understand how this is unique and can be a valid and novel store of value, basically. But let's remember, this was also created with the idea of it being a unit of currency, a kind of native currency to the internet. No one wants to spend it anymore. We all want to hold it.
Listen, early on, it morphed itself from a payments idea to a store of value, to digital gold. And if you just simply think of this as the new generation's gold, it is a store of value. It will go up when people want it. It will go down when people say we don't need it. Right now there's a frenzy around buying Bitcoin all around the world. It's one of the first global assets, but there is so much leverage in the system, right? The basis, what it costs to fund long positions is as wide as I've ever seen it. And so will it last to the end of the year? I think so. Could it last to the inauguration? I think so. But I can guarantee all your listeners, there will be at least one, if not two, vicious retracements, which will test your soul, right? When there's that much leverage in a system, it washes it out. The bigger question is, why did I call this a paradigm shift? The reason I called it a paradigm shift is we had 4 years of horrible regulation and an administration that really didn't want to promote digital assets, Bitcoin, or any cryptocurrency in America. And America literally leads the world in regulation. If it doesn't work here, it's very hard for it to work elsewhere. And we have a president now, like him or not, he is great for the crypto industry. He has said early on he was going to be a crypto president, a Bitcoin president. He's got a cabinet full of believers, full of people that are long crypto. And so I think you can see with the choice of the SEC chair, we are going to have a much different regulatory environment. And that's going to allow innovation. It's going to allow TradeFi, the Citibanks of the world and everyone else to participate in this new asset class. And, it's tough because you can see on one hand, man, it feels very frothy and leveraged. A lot of the stocks feel expensive. On the other hand, it feels like the rest of the world is just going to get it. The traditional world is just going to get a chance to play.
Exactly.
Early 2024 when multiple issuers launched, right? So really creating the packaging, the regulatory support, the liquidity of the ETF vehicle, pushing Bitcoin forward. But I think over the last few weeks, you've seen obviously the regulatory regime and at least the outlook for 2025 become very conducive for digital assets and certainly Bitcoin ETFs. So we think there's another chapter here that we're starting to enter, and we're looking forward to how investors can leverage option markets and other liquidity access to really manage their exposure.
Yeah, I want to talk about 2025, but Nate, something really extraordinary is happening with these Bitcoin ETF flows. These 12 Bitcoin ETFs now have, they're now the largest holders of Bitcoin here. I saw 1.1 million Bitcoins held in total, and I think that's relevant because that, we believe, passed Satoshi Nakamoto's 1.1 million Bitcoin holdings. And by the way, we don't know exactly who he is or how much he holds, but the estimates have been as high as 1.1 million. But Bitcoin ETFs now are collectively the largest single owners of Bitcoin. Tell me a little bit about what you're thinking. Why has Bitcoin ETFs become a preferred way of holding Bitcoin?
Well, first of all, I don't know that this is exactly what Satoshi had in mind when he created Bitcoin, to have Bitcoin held via some of the largest asset managers in the world. But here we are. I want to go back. When you look at this category overall right now, last I checked, spot Bitcoin ETFs are nearing $110 billion in assets overall. And they've done this in about 11 months. For context, the physical gold ETF category, which has been around for over 20 years, that has about $125 billion in assets. So it's not inconceivable to think that spot Bitcoin ETFs will surpass gold ETFs sometime over the next several months, which is just astounding when you think about it. When I think about the demand here, I think everything lined up perfectly for these products coming to market, because remember, you had over 10 years of pent-up demand here, because the first Bitcoin ETF filing was all the way back in 2013. And this has been talked about ad nauseum over the past decade. So I think that created a lot of pent-up demand. As we talked about earlier, Bitcoin itself has obviously performed very well. It's up around 140% this year. That clearly helps. There's just been a ton of coverage in this space. That helps generate investor interest. So all of the ingredients have been there. It's really been a perfect recipe.
Really, it's been remarkable, Brian. Tell me a bit about Paul Atkins. He's the nominee for the SEC chairman. How are they being viewed in the ETF community? I know the Bitcoin community thinks Atkins are positive, but what about the ETF community?
Absolutely, yeah. I think it's been known that he's been a supporter of Bitcoin, and I think 24 was really the point at which you break out, right? And I think, again, as I mentioned, the next chapter, hopefully the ease of bringing new ideas and new opportunities for the asset class is what we're going to see 25 and beyond, whether that's reserves, access points, or additional liquidity vehicles. I think that's a huge opportunity for the asset class.
What about institutional community? Is there hope obviously there's a lot of barriers still up about owning that. Is there any sense that might change?
Yeah, so if the ETF becomes the liquidity vehicle for holding the digital assets themselves, it's a known vehicle, it's liquid, it's regulated, and I think that really touts the benefits of the ETF. So hopefully that's the kind of that intermediary vehicle that we needed to give the institutional marketplace more access to digital coin.
Yeah, Nate, he mentioned here, Brian, briefly, there's this entire huge complex around Bitcoin now, from options to income variance. Riff on that for a moment. Why has Bitcoin acquired such an aura in the American mindset? I mean, Jay Powell has said it's primarily a speculative investment. Is that right? Is it essentially a get-rich-quick scheme, or does it have another kind of use case?
Well, I think if you look at the demand overall, investors are clearly viewing this as a viable store of value and something that is an asset that is here to stay. And when I think about the ETF specifically, I think that's indicative of a shifting regulatory landscape, which has given investors, and in particular advisors and institutional investors, much more confidence to come into the crypto arena. And then you look at how the ecosystem is developing around Bitcoin and in the traditional finance space with things like options coming to market. I think we're going to see a proliferation of ETFs that play on Bitcoin. We're going to see buffer defined outcome Bitcoin ETFs. We're going to see tail risk hedging Bitcoin ETFs. We're going to see all flavors of ETFs coming to market. And, going back to the regulatory environment, I do want to make a quick note on that, and that by all accounts, the Trump administration is going to take a much friendlier approach to crypto. We're already seeing that with the establishment of a crypto czar in David Sachs. Paul Atkins is set to succeed Gary Gensler as SEC chair. He's viewed as being much more crypto friendly. So the overall regulatory backdrop has turned much more positive. I think you're seeing that reflected in crypto prices. You're going to see that reflected in a proliferation of crypto ETFs coming to market.
Yeah, I mean, Brian, regardless of the use case, your point before, there's this huge complex around it now. Options to income variance, for example, that's going to keep expanding.
Right. Yeah, I think the big next wave is the wealth channel, right? So advisors have asked us, how do I use it? Where do I allocate it to? And we've helped them with some of the research. I think as Nate had mentioned, when you look at it as a storage of value or compare it to gold, but if you add up all of the assets in the investable market, including Bitcoin, you're right around a 50 basis points to 1% allocation, right? So for people asking that question, if you don't own it, you're 1% under allocated to Bitcoin. So that's